And I am live. Alrighty. How can you improve your standing with your creditors? How can you improve your credit score? How can you fix your credit? How can you become a better debtor in the eyes of your creditors? I'll tell you. But first, let us I'll tell you, but first, let us, if you're here, I just got distracted. I'm so sorry. But if you're here, be sure to like this video, subscribe to my YouTube channel, and definitely follow me on Facebook and Instagram at Big Facts with Carmen. All right, cool. I'm Carmen Bernard, Carmen Boss Lady Bernard, and I just want to bring you a quick strategy for improving your credit score, for fixing any niches or notches that you have in your credit, um, while gaining points, gaining mileage, and be looking like a better debtor in the eyes of creditors. So here's the scenario. You're going on vacation. You've been planning this vacation. You know what you want. You've already picked the destination. You've already planned the flight. You've already figured out your food. You've already know what you're going to be shopping on. You're ready to go. So here's what you're going to do. Book that vacation, everything about it, on your credit card. Preferably one that gives you back points for spending, one that gives you back mileage. So if it's giving you points and mileage, the better. If it's giving you points and or mileage, does not matter, but book it on there. Go on your vacation, have fun, right? And when you come back, this is what you're going to do. You are going to request a loan from your insurance company, from your cash value life insurance. Side note, you already have to have built up some cash value in there. Okay. So now you're going to request a loan from that cash value insurance, and you are going to have them send it directly to your bank. Okay. Remember that when you take that loan, it will not affect the cash value in your policy, because you're not actually taking money out of your policy. You are borrowing money from the insurance company's money, while you're leveraging your policy as collateral. All right. So the money stays in your policy and continues to grow, continues to get uninterrupted uninterrupted compound interest, as if you never touched it. Okay, so that's one benefit. Now that the money hits your bank, you're going to take that money and you're going to pay off the credit card. Okay, so if that vacation was $5,000 or $10,000, you're going to pay off that credit card. And you may have already made a decision for how long you want to take to pay off that credit card. You're definitely not going to pay minimum payments to pay that off, because you know what that is. You already know. If we're talking about this strategy, you already know that. Okay. However, you're going to pay off that credit card balance. Now that you've paid off that credit card balance, you may say, well, why would I want to go through all of that? Why can't I just take my savings and do it? Well, let me tell you, right? You want to do that because now that you've paid off the credit card balance, in the eyes of the credit card company, you are now debt free. You've paid that off. And they now report that to all of the credit bureaus, right? Every company that's looking, they're looking at you as a responsible borrower, a person that pays back their debts, right? Um, if you guys looked at what is that movie? What was that on Netflix? Crap, I can't remember. But Atlantis, I think it was, always pays their debts. Okay, right. So you always pay your debts. So you look like a great debtor. You a great borrower. You always pay back your money. You're very responsible, right? Now that you've transferred that money to the um, to your insurance company, you can now take your time paying it back. Number one, there's no specific time that you have to pay it back. Number two, there's no stress. You don't have to worry about missing payments. However, you may want to see how that company is actually how that company actually does their loans, right? When you pay it back, um, the companies that I use in that very first year, there's no interest charge, or even if the interest is added, it's not added to the loan until the first year anniversary. So that means for that very first year, you're basically getting a zero interest loan. So if you pay that off by the end of that first year, you've now saved on interest, you've now gained points, you've now gained mileage. The companies look at you as a great debtor. So you've done a whole lot of things with $1, right? You are so you can pay back that now monthly. You've also saved on the high interest that you would have had on the credit card. Okay. So this is something that you can do, but it's not done with just any policy. If you have a policy that you would like me to review to see if you're able to use those strategies, we can do so. If you don't and you'd like to set one up like that because you want to be able to use money smartly, you want to use money where you're not paying interest on it, you want to schedule a talk with me so that we can see what type of policy it is that you need to use this strategy. That's all I wanted to bring to you today. I'm Carmen Bernard. Thanks for joining me. Thanks for watching. Thanks for sharing. Um, Please hit that love button. It does not hurt. And make sure that you join me tomorrow when I bring you another tip on something else. You don't know what it might be. It might be on um, in life insurance, health insurance, Medicare, home health care, taxes, tax liens, tax deeds, could be anything. Tune in because you do not want to miss. Thanks for joining me again and have a great one. Bye bye.